let's look at the media sector and what Q4 has in store. Now, Q4 has been weak for media companies. It was a strong Q3FY23, but this time around, weaker box office collections, a sequential decline in performance largely on account of content issues, the exam season, all of that is likely to play spoil sport. Let's start off then with broadcasters. Now, generally, Q4 has been fairly challenging. This time around, we're expecting ad revenues for Zee to dip by 12 to 14% on a year-on-year basis. And you also had ad revenues from Zee Anmol, while the NTO 3.0 led to a blackout effect impending the ad and subscription revenue. ZEE5's losses are likely to remain high. They hosted the ILT 20, which will lead to incremental sporting costs, and that could drag their margins. Expecting sales and services as well to grow by 10% year-on-year due to movies like Chatterjee vs. Norway, as well as Thinnuvu giving a decent run. We're expecting subscription revenue to witness growth due to the NTO effect maturing out. Merger costs and other exceptional items could be to the tune of about 100 crores in Q4. Analysts will also be monitoring the Zee-Sony merger very closely for updates coming in down the line, so that'll as well be watched out for. The other broadcaster, Sun TV, and we're expecting revenues to dip by about 5% on a year-on-year basis. The base quarter had IPL revenues of about 4 crore rupees. Ad revenue growth could remain flat, and Sun TV, according to analysts, needs to expand across regions to gain market share and invest more in OTT. Analysts will be looking forward to movies coming out from Sun Pictures as well in FY24, which will be a key driver. Let's move on then to the multiplex space. It is the first quarter for the merged entity and synergies shall kick in. I'm talking about PVR-INOX, the merged entity. It's been a blockbuster January, weak February, reasonable March, but all in all, it's expected to be a pretty weak set of numbers this time around in Q4. Pathaan, though, that has been the silver lining. John Wick Chapter 4 also did quite well, and regional movies, they have done quite well, garnering close to about 100 crores. Ad revenue growth of the merged company is expected to be at close to 100 crores. That PVR-INOX's EBITDA break-even occupancy is seen at about 18 to 20%. Footfalls are seen at about 35 million versus a combined footfall of about 37.1 million in Q3. There are some promising lineups down the line: Avanne, Guardians of Galaxy Volume 3, Maidaan, etc. that will be watched out for. Now, in the media space, we've seen a lot of M&A activity. We're expecting ad revenue growth to improve in FY24, driven by these mergers and improving margin profile of consumer companies, as well as likely rural recovery in FY24.
If you like this video, then like, share and subscribe to ET Now.